Okay, I'm recording now. Okay, can you hear me now?
Yes, I can hear you.
Okay, you can see me, right? Okay,
Yes,
let
I can
me
see you.
let me off the video so that
Okay.
okay, you can see my chat like this, right?
Yes.
Okay, now like I was saying, I said there are two trends in the market. Is either the market is trending up or it's trending down. So there's a buy trend and there is a sell. There is a sell. So for what I do on my analysis, I only do two things. I do two things. Number one, I check my higher time frame for the current trend of the market. You understand?
o-
And number
Yes.
two, I check if the market is overselling or is overbuying. All right. What I mean by oversell, I said something earlier. I said for you to for the best way to enter the market is to catch up with the trend as early as possible. Catch up with the trend
Okay.
as early as possible. All right. Me, I don't enter the middle. So how do we catch up at the trend? How do we catch up with the trend as early? Okay. First of all, we wait. Before the market is 90% waiting and 10% execution. We wait. We wait first. Let's make sure that the market, well, if the market is, first of all, you check the trend of the market. If the market is actually selling, you wait until the market is oversold. I hope, I don't, are you hearing me?
Yes, I can hear you.
Okay. You wait until the market has oversold. Okay. If the market is buying, you wait until the market has overbought. Okay.
Okay.
Until, because when something is selling, when the market is selling, it's trending sell. When the market is selling, okay, then the market will get a particular point that it cannot sell again. That point where the market cannot sell again, it means that the market has oversold. Okay, if the market
Yes.
is buying, all right, the market will get to a point that it cannot buy again. At that point, it means that the market has overbought. So when the market has
Yes.
overbought, the next thing is that the market starts selling immediately. And when it starts selling, that is the early trade. That is the early trend. That is the early stage of the sell trend. That is the early stage of the sell trend. When the market has overbought and when the market has oversold, then the next thing the market will start doing is start buying. And then when they start buying, that is the early stage of the buy trend. And that is the best time to enter the market. So you can catch a lot of pips from the market. Now, the question should be, how do we know when the market is overbought and the market has oversold? Okay, now we use a particular indicator to identify if the market has overbought or oversold. That indicator is called the RSI, the relative strength index. Hope you're
Okay.
getting me. You're understanding
Yes,
me?
I get you.
Relative strength
Yeah.
index. So what's the relative strength index for you? Are you on your chart now?
Yes, I'm on my
Trading
MetaTrader
view.
5.
Okay, MetaTrader 5. Okay, can you add indicator? Add your RSI to your indicator, to your chart. Can you add it? Do you
Uh,
know what the RSI is?
no.
Okay, just go to your, but you know how to add indicators to MT5 now.
I've seen it before, but I forgot to know.
Okay, let me guide you. If you're on your chart now, go to the GBPUSD 15 minutes time frame.
Yes, I'm there
If
now.
you look, if you look up at your screen, you see an icon, an F icon, F. You see a F icon. Have you seen it?
F. Yes, I've clicked
F.
on it.
Yeah, click on it. Then you see main windows. Click on the main window.
Main Windows.
Yeah, click on the main window. Do you see the main
Okay.
window? Click on the main
Yes.
window. Yeah, search for the relative strength index. Just scroll down. You see list of indicators.
Yeah.
You see
It's
list
under
of indicators.
oscillators.
You say?
It's under oscillators.
Yes, under oscillators. Yes.
I've
You see
seen it.
relative strength index. You see, yeah, add it. When you click on it, you will see 14 period. The period is 14. Apply to close. The levels is 30 and 70. Click on done.
Okay. Okay. I should put the period 14.
Yeah, period 14.
Okay. Apply close.
Good. Yes, apply close. Then levels 30, 70.
30, 70,
Apply to
50.
all time frame. Yes, levels 30, 70.
30, 70. Okay. Apply to all time frames. Okay.
Yes, time frame.
Save. I've added it.
You've done it.
Yes.
Okay. Now let's Okay, now let's go back. Okay, you can see how the relative strength index look like now.
Yes.
You can
It's
see how the
moving.
thing looks like.
It's just like a wave.
Yes, it's like that line is called the moving average. They always have a moving average. You can see it's moving according to how the market is. You can see,
Yes.
check.
Yeah.
Okay, now how do we know? This is the indicator we use to identify if the market has overbought or has oversold. Okay, now how do we know if the market has overbought or oversold? Now let's first check the trend of the market. Let's go to the higher time frame. We'll know whether we are looking for a buy trade or a sell trade. Let's go to the higher time frame. Let's go to the 4 hours. Enter your 4 hour time frame. You see my chart now. I want to enter my 4 hour time frame.
Okay. I've entered my 4 hour time frame.
Now, if you look at a 4 hour time, what do you think is the trend of the market now? What is market? Can you tell?
I think it has overbought and it started selling.
What is the trend of the market now?
I think it has overbought
I
and it
know it
started
has
selling.
overbought. I know. I'm asking, like, is it a buy trend? Is the market trending buy up or down? Like now.
It's trading down.
Now, okay, yes. Now the market has overbought and is actually trending down. So how do you know if the market has overbought? How were you able to identify it?
It's through this
Because
indicator.
currently now, I want to take a look at something here. I want to get something here. Now, if you look at the market now in the 4 hours time frame, 4 hour time frame is actually in an uptrend and is in the early stage of a sell trend. It's in its early stage of a sell trend. If you take now, how are you able to identify if the market is selling? How are you able to identify that the market has overbought?
It is through this relative strength index.
So you later said here. Now you can see that they have two levels there. They have the 70 level and the 30 level. Take a look. Let me put it here. Right here, we
Yes,
have
I've
the
seen.
80 level. Have you seen it? We have the
Yes.
70 level and the 30 level. All right. Now my own level here is in my laptop is kind of different, but it's the same 14 period 14, but the levels are different, but it's still the same thing. The format are the same thing. But let me use the MT5 to teach you according to what you're seeing on your screen. All right. Now you can see now we have level 70 and level 30. Can you see it?
Yes.
Now the level 70 represents the overbought. That is the overbought. Are you seeing that is the overbought? What should I call that? Is the overbought? Are you seeing your screen?
Yes. The overbought region.
Okay. Now you have the two level, we have the 70 and the 30. Now when the market get to 70, when the moving average, when the are you seeing moving, you're seeing the movement of the moving average, right? When the moving average
Yes.
get to the period 70, when you get to the point 70, all right, that 70 line, when you get there, it means that the market has overbought.
Yes.
All right. It means that the market has overbought. But when the market is at the 30, the line 30, that is the level 30. All right.
Yes.
Then the moving average is at the level 30. It means that the market has oversold. Are you getting
Yes.
me? Now, how do we identify if the market you can see if you look at the moving average was trending up. All right. And the market itself was also trending up. It means that previously on the 4 hour time frame, we are on the buy trend, we are on the uptrend. All right, we are on the uptrend. But recently the moving average got to the level 70, which identified that the market has overbought. All right, and it started coming down. You can see it started coming down. All right. Now, when the market has overbought, now the market does not have any choice than to sell because it has overbought. When something has buy, like you don't buy, it's no fit buy again. All right. Now, at this point, it's telling you that the sellers in the market are more than the buyers in the market. Are you getting me?
Yes.
The sellers in the
Yes.
market are more than the buyers in the market. So when the market has overbought, buyers are now much. It was trending in 4 hours. That means the buyers are much in the market. Okay. But when the market has gone to point at level 70, it means that the market has overbought. Then the market has no choice than to start selling. Now, at this point in the 4 hour time frame, we are still on the uptrend, though, but the market is in the early stage of a downtrend. And this is the right
Mm.
time to enter the market. All right. But just because the market has gone to the market is at the overbought position, at the overbought level, does not mean that we should start selling immediately. We need a confirmation. Are you understanding me? We need a confirmation. We
Yes.
cannot just start selling immediately. We need a confirmation to show that yes, the market is going down. This is our confirmation. Because the market can still reverse. There can be a reversal.
Yes.
The market can still reverse up,
Absolutely.
but it can still reverse, yes. But you know that when we are trading on the 4 hour time frame, it means that we are taking swing. We want to take a long-term trade. A long-term trade. Before this market will go down to the oversold position, it will take the whole of this week. Before this market would go down to the oversold position, it will take like to the end of this week. All right. So what do? We cannot take trade on the 4 hour time frame because now 4 hour time frame is just to identify the trend of the market. All right. The market is still uptrend, but it's at early stage of a sell trend, but it's still uptrend. Because if I'm looking at here now, according to what I'm looking at on the chart now, I've not even gotten my own confirmation that I should sell if I want to sell on the 4 hour time frame. I've not gotten my own confirmation. So it means that the market can still reverse. Because I'm not seeing any confirmation that I should sell on the 4 hour time frame. But in as much as the market has started selling, that it's at the early stage of the sell trend, this is the best time to catch the trend of the market. Sell early, buy early at the early. So you follow the trend, all right? But make sure you follow the trend. You catch up with the trend as early as possible. With that, you can be able to catch up more pips in the market. All right. Now let's go back to our 15 minutes time frame.
Okay. I'm there now.
You are there now, right? Good. Wait,
Yes.
let me do my screen well. Okay. Okay. Now if you take a look at this, now let's go out of now. Let's check the trend of our the trend now in what's the trend in the 15 minutes time frame? Can you tell?
Yes. It is in a downtrend.
It's in a downtrend. Good. It's in a downtrend. Now they can see that the market is selling on the 15 minutes time frame. All right. It's
Yes.
selling on the 15 minutes time frame. Now, when the market is selling now, you can see the market is on its way to get to a oversold position, oversold level.
Yeah.
Or is on its way to its oversold level. All right. If you see the move, if you see the RSI, you can tell. If you take a look at the RSI, you
Yes.
can see the movement of the market. You can tell that it's on its way to 30, level 30.
Yes.
Are you seeing it now? Then just what we have to do now, we have to wait patiently. We wait. We don't need to rush the market. We wait. We wait until the market is oversold on the 15 minute time frame. Then we'll take a buy. We wait.
Okay.
Now we cannot just wait until the moving average. You can see the moving average is that it has gotten to its point before. It has gotten to the
Yes.
30 before. You can see it touches the level 30 line. Take a look very well.
Yes.
Now,
I've
if
seen
it
it.
is me, if it were me, I will not take that trade. You know why I will not take that trade? Because I
Why?
need that line, that moving average to cross over the 30 level. The level 30. Let me show you an example. Take a look at my screen on the laptop here now. Now,
Okay.
I want to zoom this thing back. I want to do this. Now, take a look at here. Look at this level. Can you see this point? Can you see this?
Uh,
Can you see
I'm
this?
not seeing it very well.
Okay. Let me zoom again. Can you see this now? Can you see it?
Yes.
You can. Okay, let me zoom it properly. I want you to see this very well. Look at this line. Can you see it now?
Um.
You
Yeah, I can see it now.
can see it now. Okay, you can see that this line. Look at this blue line. The level moving average. You can see the thing crossed over the 70 line. The level 70.
Yes.
It crossed over. Okay, I didn't just. It's when you can only take the trade only when the market, the price of the RSI cross the level 70 line. The level 70 line.
Okay.
Can you see it? Don't just say because don't just say because the moving average touched the line. You can now the market is over. But sometimes the market can just go. It will keep crossing over. It will keep going over the 70 line, keep going over. I'm saying this because in case you want to trade gold, because it's gold, that crazy pair that I usually do like that. When growth gets volatile, when the gold is oversold or overbought, the moving average in the RSI cross the overbought or oversold line. It crosses it above. It keeps going up and up and up. Like it keeps going up and up like that. But when we want to know why, how do we know that the market has started selling at the early stage of a downtrend? Now, when the moving average crossed the overbought line, then it started coming down. You can see this started coming down right here.
Mm.
It started coming down. Can you see?
Yes.
It started coming down. You can see what it did here. From here like this. I don't know. Let me use objects with all those. No, I think it's here. Okay. Okay. Let me use this circle. Okay. Can you see this line now? Can you see
Yes.
what I'm drawing here? Okay. You can see what
Yes. You
happened
are
here.
drawing a line. Yeah.
Yeah. I'm drawing this circle. I want to take a look at this circle.
Okay.
I want to look at this circle now. You can see what happened here. Look at this place now. The market went here. You can see it crosses the line. All right. You can see what happened there. Market crosses over the
Yeah.
70 line. All right. And it started coming back. It started coming down. Are you seeing that? It started coming down.
Yes.
It started coming down. This is what happened here. Now you wait until that moving average cross over. Okay, and when it started coming down, okay, now you have to. That is one confirmation. That is one confirmation. Now we need a third confirmation. How far have we gone? Now, first of all, we check the trend of the market in the higher time frame. You get? We
Yes.
check the trend of market in the higher time frame. Now, we now come back to the smaller time frame. We look for a confirmation there. We check the trend of the smaller time frame. We look for a confirmation. First of all, we wait until the moving average in the RSI cross the overbought or the oversold line. All right. Then we wait until it starts coming down, until it starts crossing back, until it starts crossing back the overbought line. When it starts crossing back the overbought line or the oversold line, then it means that the market is at the end stage of a
Okay.
buy trend or of a sell trend. Are you getting me?
Yes.
Are you getting me? The market is at its overbought stage I mean the market is at its early of the is at its early stage of a buy trend or a sell trend. Are you getting me? Now
Yes.
just because the market is coming down does not still mean we should enter immediately. Now we need a confirmation. That is where my indicator comes in. All right. Now let me go back to this. Now, okay. Let me bring down my charts. So I want to remove this thing. Okay. Can you see now? Now
Yes.
look at now. Now I want to use this line. You can see this plus line I'm using now.
Mm.
Can see this thing now. Look at this place now. The market crossover. Look at the point. Look at it now. This is the point where the market got it oversold at this candle now. This place. Can you see it? This buy
Yes.
candle. Can you see this is at this point the market got with overbought position. Overbought position. Now at this point you can see the market reversed a little with one candle. You can see it started coming
Yeah.
down. Started coming. Now at this point I got my first of all I got my first confirmation here. You can see sell. Are you seeing it?
Yeah.
Sell. Now on the that is my first confirmation, but I wait first because I need so many confirmation. First of all, and another one I got another confirmation here, another short. As you can see, short. Now from this point, I short the market. I will have to short the market. I will have to sell. At this point, I will have to sell. Can you see that? At
Yes.
this point, I will have to sell. At this point, I will have to sell. All right. Now you can say, wait, hold. You can still hold there. You say, wait, I still need more confirmation. If you still need more confirmation, all you have to do is wait. You can still wait for the moving average here. Okay, your own is only one moving average now, right? Okay.
Yes. It's only
Now I
one.
just wait for my confirmation here. Okay. My own is two moving average. Sometimes I can wait for the moving average here, the blue line to cross the yellow line. All right, before taking entry. All right, before taking entry, but I can still take entry here. Most of the times I take entry at this point. I wait. I take
Okay.
entry at this point. All right, I take entry at this point. Now this is short. I short down from this particular point here. I short from this particular point here. All right.
Mm.
Then when I short from this particular point, now I have to wait. You can see the market started coming down. At here, at first, it take first of all, I just let me put my short. I take the market from here, right? I see that this trade went in profit.
Yes.
This trade went in. I don't. If I should zoom in my. I don't want to zoom in because of you. If I should zoom in, I can be able to enlarge my this thing, my stop loss on my TP level. So,
Okay.
but let's do it this way first. So, are you understand? Are you understand what I'm saying?
Yes, I'm understanding.
Okay. Now I short from this place, and now the market started going down. You can see at its early stage of a trend, of a sell trend, I started shorting from at the early stage of a sell trend. Started shorting from this place. You can see how many pips I must have taken. At this point, from year to year, like 30 pips. From year to year.
Mm.
Now, why I say I don't wait till TP depends. I don't wait till TP because of if another arrow should come out, like this arrow now, you can see. If this arrow now should come out, I will close half position. You understand? It
Okay.
means that the market wants to reverse.
Yes.
That's a reversal arrow. All this arrow is a reversal arrow. It means the the market wants to reverse. Now, when I see this, I usually open to position. Now, this is where risk management comes in. This is where you take note. This is where you what how should I say? This is where you take your emotions out of the market. If you know how to manage risk, actually we are coming to risk management. Let me explain now. Now in this place, I will open two position because that's what I usually open. Sometimes I open two or three, but most of the times two. Open two position. Now when I open two position, when this arrow, another arrow should come out, I will not wait for TP. I will have to close one position. And when I close one position, I will have to break even. You understand?
Okay.
I will have to break even. Do you know what break even means now?
Yes.
I will have to move my stop loss to
There's
my
maybe
entry
your stop
price.
loss to your entry
Yes, I
price.
have to
Yes.
I will trail my stop loss. I will trail my stop loss from the point to entry price. All right, so I have to
Yes.
close. So in case the market reverse, I will not lose any money. I've already closed a profit. So in case the market reversed, I will reverse to my entry point. It will close in profit, in small profit, or in 0.00, in no profit at all. All right, but if the
Mm.
market should not reverse to my entry point, the market will still come down and hit my TP. So that is
Okay.
just it. So that's what I do. Now, now for you to manage risk, if you want, I don't know. Well, before I go into risk management, I want to know if you understand what I've been saying so far.
Yeah, I understand what you're saying. I
So, if you have
understand.
anything, you want to ask any question?
And the only question I want to ask is
Hmm.
why is there two lines in the laptop version of the
Okay,
ROSI?
okay. It's actually the settings. It's the trading view settings. It's actually trading view settings. I can actually remove the settings to make it one moving average. I can actually make it
Oh,
one moving average. Yeah, I can make it two move. I can also add even more moving average to it. I can add more. I can add like more. I
oh,
can add like up two more moving average to it. I can add like three more moving average to the RSI. You understand?
okay.
It's actually settings. I can actually remove all the moving average stuff. I can remove the blue and yellow line. I can add more moving average. So it's actually the settings. Even on your RSI, your MT5, you can actually add more moving average. You can add.
Okay.
Yes,
But
I
it
think
doesn't
so.
matter.
It doesn't matter. It doesn't matter. It doesn't matter.
Okay. I thought maybe one is for more confirmation.
Yeah, you can add for more confirmation. You can add if you need more confirmation. You can add. You can add
Okay.
if you need. You can add. But me, I got all the confirmation I need. I have like three confirmation on this chart, so I think that they are all right. So it just depend on you. Depend on your strategy. Depend on what you can take. All right. You
Okay.
understand? Yes.
Mm.
Yeah. So that's just it. So now you know how to manage risk. Let's go to risk
Yeah.
management. Okay, now, okay. First of all, let's do with our own analysis. Let's see what we are waiting for in the market first. Let's see what we are. Let's analyze the market first before I go into risk management. Let's analyze the market. Now, you can see Let's analyze the market first.
Okay.
And you can see we just got. You can see what we just happened. We just got a long here. We just got a long here. It means we should buy. Now the market will start buying soon, but I'm not going to take this trade. You know, I'm not going to take this trade. It doesn't align with my. It doesn't align with my strategy. Yes, it doesn't align with my IWSI. You can see the IWSI. It means that the market can still reverse. So this market can still reverse. So the market can still reverse and it will still hit. It can still hit stop loss, but the market can still go up and it can still hit take profit. So I don't want 50-50 things. I don't want to be 50-50 on one side. I don't want to be 50-50 on the other side. You understand what I'm trying to say? I want to be like
Yes.
at least 90% sure of my signal. I want to be 90% sure of my entry. I don't want to be 50-50. Okay? Because at this point now, the market can either reverse back, it can hit your stop loss, and it can either go. Because if you take a look at your RSI is actually before on its way to its oversold level, because the market is actually selling. So this one is actually a risk. If you take this, it's actually a risk. You're actually risking. It's actually a high risk. Okay, but it can actually go up. So now, what I'm looking at on the market now, we are either looking for a buy position or we are looking for a sell position. You understand?
Yes.
Are you with me? Now we are either
Yes,
looking
I'm
for a
with you.
buy position or we are looking for a sell position. Oh, sorry. Okay, we are either looking for a buy position or we are looking for a sell position. All right. So now, why do I say we are looking for a buy or a sell position? Now you can see the market has already touched the level 30 before. All right, it means that the market has oversold already, and then the market started reversing up, but it didn't cross over the level 30. The market didn't cross over the level 30. All right,
Yes.
it didn't cross. So that's why I did not take this trade. I want the moving average to cross over that level 30. I want the moving average to cross over the level 30 well to show that yes, the market has truly oversold. Market has truly oversold. Now, just take a look at this place now. Take a look at this point now. Look at the market. First of all, you can see that there is. Let me draw. I want to draw something. Sorry, I want to zoom this thing. I want to show you there's a support zone here. There was a support zone here. If you take a look at this point, there's a support here. Wait first. Let me do this. Take a look at this point now. There's a support here. Are you seeing what I'm doing?
Yes.
Okay. There's a support here. Huh?
Okay. I think price break that support level, or it has not yet broke it yet.
It has not broken its way.
Yes, it has not yet broken it well. Okay.
It has not broken its way. So you can still the market started reversing up. Now you can see why I say this thing is 50-50. Now let me tell you why I don't want anything 50-50. I want to be at least 90% sure of my entry. Now you can see here there's the support zone here. Now when you can see this market here, look at the market, the price of the market came to this zone. It came to this zone, then reversed, then came back, then reversed, then came back, then reversed, then came back. You can see how strong this support zone is.
Yes.
Are you seeing it? You can see how many times the price of the market has come to test this zone. It has tested this zone so many times. All right. The price of the market has come to test this zone like 1, 2, 3, 4, 4 times now to show you how strong the zone is. The zone is very strong. And now you can see the moving. Look at now. The market can still reverse up because this zone is very strong. It tries to break the zone, but it didn't break it well. Then it started reversing up, but it broke it a little bit small. But now this thing shows that the market can either reverse back and still break this zone, and still go back to the oversold, and the market will go to the oversold level. When the market go back to the oversold level, then the market will start reversing up again, or is either the market start buying from me and start going to its overbought level. You understand? I don't know if you're getting me. Are you understanding?
Yes.
Okay. Now, what we are looking for here is that now we have to wait. We have to wait first We have to be sure of what we are doing. We have to be sure of what we are doing. Now, let's wait. Let our moving average, either we wait for our moving average to cross the level 30 very well. Let that moving average cross the level 30 well to show that, yes, the market has oversold. Truly, that the market has oversold. All right? The market has oversold. Now, that is when we'll start looking for our entry. We'll start looking for our confirmation. That is when we'll start looking for our entry and we'll start looking for our confirmation. Now, if the market should not break this zone and started reversing up, now it means that the market is now buying. The market is buying. And the market now is going to its overbought. It's actually on its way to overbought level. All right. If the market should go to its overbought level, now we'll start looking for a sell. We'll start looking for a sell trade. You understanding me?
Yes.
We'll start looking for a sell trade. No, we wait. First of all, what we do now here is that we wait. We wait to be sure what we are doing. Right here now, if we should take trade here, our entry will just be 50-50. We can either make profit and we can either make loss. So right here now, this is not the best time to enter. Even if our entry point, like I said earlier on this live stream, I said just because our indicator said we should short or we should long does not mean I will enter the trade immediately. I don't know if you can remember I said that. I will have to look for more confirmations first. You can see there's a zone here. This zone is very strong. I'm thinking that the market can still come back and break this zone because that's what I'm seeing in the market. Because if you check the last candle actually broke this zone a little, but it started reversing back.
Yes.
I don't know. Can you see it? Can you see it?
Yes, I can see it.
Yeah, I started reversing. So what I'm looking at now, I'm thinking that the market can either break this zone. The market will come back and break this zone. That's what I'm observing. The market can still come back and break this zone. So if you should come back and break this zone, means I'm even praying the market should break this zone. Because if you come back and break this zone, we are going to take entry. We're just going to be looking for a few confirmations. I will take entry, and probably we are going to make that our trade is going to be 90%. We are going to be 90% sure of our trade. We are going to be 90% sure. Now, what are we waiting for? Now we are waiting for two things. We are waiting for either the market should come down and break this zone. Because I'm looking at it. The market should come out and break this zone, and the market should come down to its oversold level. All right, the market should be oversold. Now we are waiting for the market to be oversold. I'll keep an eye on the market because I don't know how long it will take for the market to occur on the 15-minute time frame. We don't have to rush the market. We don't have to rush our take entry. We wait first. We have to be patient to wait for our perfect entry. All right, we wait. Let the market come down to its oversold level. We are waiting for the market to come down to oversold level. We're waiting for two things. Let the market break this zone and come down to the oversold level. If the market should break the zone, break the support zone, and come to our oversold level, then we'll start looking for an entry. But if the market should not break this zone and started going up, then I think if we do not see any entry now, we'll have to avoid trading for today because we are not sure of our entry. I don't know if you understand it. So if you are not sure, instead of us to just trade and lose money or trade and be doing 50-50 things, we have to wait first. We have to wait. Any day, that's one thing about trading. We have to maintain discipline. Any day you don't see your entry in the market, if you don't spot your entry on the market, don't trade for that day. Just wait until you spot your entry on the market, then you can go. You can go all in. You can lock in. You understand? You can lock in. Now, what are we waiting for again? We are waiting for the market to come to our oversold level. We are waiting for the market to come to our oversold level. All right? So that's what we are waiting for.
So now, if price break this support zone, when are we going to take the buy?
If the price should break the support zone, we are going to be looking for a buy if the market should. Now, if the price will break the support zone, now it means that probably the market will go to its oversold level. All right? Because the only obstacle I'm seeing right here now is this zone. That's the only obstacle I'm seeing right here now is the zone. The zone is actually very strong and it's stopping the market from going to its oversold level. That zone is very strong and it's stopping the market from going to oversold level. You can see how many times the market has come to test that zone. So if the market should break the zone now we'll start waiting. Wait until the market goes to its oversold level. All right? We'll wait till the market goes to its oversold level. All right. Then when the market goes to its oversold level, when the market, that moving average cross the 30 line, when the moving average cross over the 30 line, and when now say yes, the market is actually at our point. That is where we are waiting for. Where we should start getting ready to strike, to go all in. We should start getting ready to go all in. Then when we wait, when the market is at its oversold level, then we have to wait until the market started reversing. Then when the market is reversing, we have to wait for our one more confirmation, which is this our arrow here. If our arrow is saying we should go all in or we should wait, if our arrow says we should sell or we should buy. I say if we can see this arrow when the market has crossed over the level 30 and the moving average is crossing again, is crossing back, going up above the level 30, then we should be looking to take a buy. We should be taking a buy. Do you understand? You understand? Now what did I say we are waiting for? We are waiting for this zone. The obstacle we are seeing now is this zone. The obstacle now we are seeing now is this zone. Now let's wait. When the market should, I'm still thinking the market will come back and break this zone. That's what I'm observing. The market will come down and break this zone. And when the market breaks this zone, we should be waiting for the RSI moving average to cross below the level 30. Okay. Then when it crosses below the level 30, it means we are going to take trade today. We should be waiting. Then when we wait, when the market started crossing again above the level 30, which means the market is at its early stage of a buy trend. All right. Okay. Now when it started crossing over the level 30, then we wait. When we get an arrow here, then we'll take a buy. We'll take a buy. So in as much as this live, I'm not going to keep you long on the live waiting. But when I get a buy, when the market, I will keep my eye on the market. When we get a sell or when we get a buy signal, I will drop it in a group so everyone can follow.
Okay, but
I don't know you understand.
I don't know. I want to ask. I understand what you are saying, but can we use it for other currency pairs?
Of course, why not? Yes, of course you can use it. The strategy go this. I don't know. I wanted to even share this thing with you, this script with you.
Okay. That's nice.
Huh?
I say it's nice. It's nice.
I have a laptop now, right?
No, I don't have a laptop.
Okay, but you can actually download TradingView on your phone. I want to share this script with you so you can be using it once in a while. Why?
Okay.
Yeah, so I'll later when I'm done what I'm doing, I'll share the script so you can see what I'm doing. So you can be following up.
Yeah.
You can see what happened here now. Can you see what happened here? Can you see what is happening on the chart now? Can you see what is happening on the chart now? Look at this place.
I'm not seeing it.
Let me zoom. Okay, let me zoom in. You see the reason? This is the reason why we should wait. See the reason why we should wait. Oh my God! I'm scratching my this thing. Can you see it now?
Still not seeing it.
Are you seeing? Okay. Are you seeing it now?
Yes.
Okay, you can see what happened here. What do you observe now?
Price is trying to break that.
You can see we have a short here. We have a short. You can see the indicator just bought a short here. Can you see it?
Okay.
You can see this. You can see a buy here. You can see a short here. You can see why we wait. You can see the reason why we should wait. We should not rush the entry. That's why I say that this trade is 50-50. And I don't want to be doing 50-50 things. I don't want to be doing 50-50 things. I want something that I can be sure of. Something that I can at least be 80 or 90% sure of. All right. You can see a buy arrow appear here and a sell arrow is appearing here again. I saw what's happening here. Now, either of this buy arrow will go out. Either of this arrow will go out. Either of this arrow will go out now. And this is why we wait. We wait. I mean, I'm still looking at the market will still come and break this zone. The market will break this zone. The market will break this zone. And that's what, huh?
I say yes, probably.
Yeah, probably the market will break this zone. That's what I'm waiting for. I'm waiting for the market to even break the zone, sef. I want the market to break the zone. You can see the chart now, right? You understand what I've been saying so far
Yes.
now, right? Now, what did I say we are waiting for?
Yeah, I understand. We are waiting for market to break this support
The
zone
zone. Yes.
and the price to get to the 30 RSI
Yes.
to get
Otherwise,
below it
I moving average should
very
get to its
fast.
oversold level.
Yes, to get to the
Yeah.
oversold level, let it even go down
Yes.
to the more than 30. Yeah.
Yeah. Yes. Yes. That's what we are waiting for. That's what we are waiting for. That's what we are waiting for. If we can get that, then we will strike. We'll go. We'll lock in immediately. Now, let's let's go to. Is there any other thing you want to ask?
I wanted to ask if there's any other stick confirmation yet. If there's any other
Okay.
thing again, because this one is
For
quite easy. I like it. It's nice.
okay. Okay, there's no more confirmation that I need again. All I just need for now is for the market to get to its oversold level. Then the market should break, the price of oil should break the support zone. If you should break this support zone, because this support zone is very strong, very, very strong. Still and still again, no, don't look this say this short they come down, oh, this market they come down. Oh. Still and still, this market can still reverse up. Oh. It can still go up.
Yeah.
Bloody hell. Be surprised, the market will shock you. It can still not break this support zone. It will still go up. That's why I say I'm 50-50.
Yeah.
I don't want to do 50-50% thing. I don't want to do 50-50 something. Bloody hell, that this market can shock you to still go up. It will reverse up. Like, and people that enter buy will make money out of this trade. It's possible, 100% possible. And it can still it's still possible that the market will still break the support zone and come down. So I don't want 50-50 something. So why I'm saying that the market can still reverse up is that this zone is very strong. The market has come to test this zone like so many times. All right, it has come to test this zone like so many times and it has reversed up. But this candlestick actually break this one. It means that this zone is already getting weak. For the market, for the price, the market should break this zone a little. It means that this zone is already weak. It is already weak. It's kind of weak already. The weak has already. So what will happen now is that the market can still come back and break this zone. It can still reverse up. So that's it. So we are just waiting for the market to break this zone. If the market should break this support zone, then the RSI moving average should get to its level 30, which is the oversold level. Then we'll start looking for a buy. We'll start waiting for a reversal. Then the next confirmation we are waiting for is the arrow confirmation. Either for we to short, or either for we to short or buy, either for we to buy rather. Because we are looking to take a buy trade. We are looking to take a
Yes.
buy trade. You understand?
I
You
understand you.
understand? Okay,
Yes.
now let's go to risk management. Do anyone want to ask anything?
No, I don't want anything.
Okay, now let's go to risk management. Now, how do you take your emotions out from the market? Now, you taking your emotions out from the market depends on your risk management. It depends because I feel like those that don't know how to manage their emotions in the market is because of they are scared of losing money. And they are scared of losing money because of they know that if they should lose any money, if they should lose that trade, it means that like 50% of their account is gone, or 30, or even probably gone because they do take high risk in the market when their account balance is very low. They take high risk in the market when their account balance is very low. Now, risk topic on its own, but I just want to give you a tips. We're going to be talking more on risk management on it, but I just want to give you a tips. Now, how do I manage my risk in the market? Let me tell you how I manage my risk in the market. First of all, when I trade, I don't take, I look, I first of all look at my stop loss. I calculate my risk before calculating my reward. Are you understanding? I calculate my risk.
Yes.
Are you hearing me? Huh?
Yes.
I
Yes.
calculate my risk before calculating my reward. All right. I calculate my risk for also, and my risk is my stop loss. I calculate because me, I usually risk. I say, well, I told you that I should risk like 1 to 3% of your account, right? Me, sometimes I risk 5%.
Yes.
Sometimes I risk 10%. It depends on what you can take from the market. It depends on you. Can you actually afford to lose 10% of your account? Are you ready to give out 10% of your account? That is it. Are you ready to give out? Like you just say that okay, if I should lose this trade, I'm actually using 10% of my account. If 10% of my account should, if 10% of my equity should go down, how much will be left? That's the question you need to ask yourself. If 10% of my equity should go down, how much will be left? If 5% of my equity should go, if I should lose this trade and 5% of my equity should go, how much will be left? That amount that will be left, will it be enough for me to recover back my 5%? That is the question you should ask yourself. If I should lose 10% of my equity, the remaining balance, is that enough? Is that enough for me to recover back my 10%? Will that be enough to recover back my 10%? If I should lose 20%, will the remaining balance be enough to recover my 20%? That's the question you should ask yourself. Me, when I trade the market, my stop loss does not go beyond 20 pips. It's 10 to 20 pips. I do take stop loss 10 to 20 pips. 10 to 20 pips. That's my stop loss. That's my stop loss at 10 to 20 pips on the market. Depending on how the market is. So if my pips is high, I reduce my lot size. If my pips is small, I increase my lot size. That's what I do in the market. Now look at this place. Look at where I place this my TP and my stop loss level. Now I'll take this as an example. Now look at now. On a serious note, look at I will put my TP here.
Okay.
Sorry. Are you with me?
Yes, I'm with you.
Okay. Now, this is where the entry is. This is the entry of the market. This is where we enter, okay? Now, this is where... Oh, what am I doing? Okay, this is where we enter the market. Now, okay, let's do this. Because my stop loss is always 30 pips. I mean, my take profit is always 30 pips. 30 pips, that's my take profit, 30 pips. I do take 30 pips in the market as take profit. So,
That,
can you hear me, right?
yeah,
So you
hear
can see, what you can see why if we took entry from here, if we should take entry from here, stop loss is actually 15 pips. The stop loss is 15 pips. That's it, stop. Look at where it's written, stop. I see it.
Yeah, I can see it.
Can you see it?
Yes.
Can you see it?
Yes, I can see it.
Okay. So the network here is okay. The stop loss here is 15 pips. The take profit here is 30 pips. Alright. This is like two risk ratio. Risk ratio. Okay.
Yeah.
I put my stop loss 15. Now we are taking 15 pips from the market. Now let me put on my calculator so you can see. Let's do some calculation. Now I said that I usually risk 5% of my account. Sometimes I risk 10. It's just depending on the mood. So let's assume I'm risking 5% of my account. Let's assume I have a $300 account. $300 account. All right. Are you listening? $300. Can you see my
Yes.
calculator? Can you see my calculator? Can you see my
No, I
calculator?
can't. No.
Can you see my calculator? It's on
No, I
the
can't
screen now.
see
You
it.
can't see it. Can you see it now? Huh?
No, not yet.
You can't see it.
Is it the one on this other side of the price?
Yes, now the calculator. I just zoom it now.
Okay.
Can you see the calculator?
Yes.
Are you sure you can see it now?
Yes.
I'm moving it. This thing I'm moving. Can you see it?
Yes.
Okay. Okay, now let's do our calculation now. I said I risked now what I'm trading on now. Let's assume I have $300 account. And I said I usually risk 5% of my account. 5%. I risk 5%. Sometimes I risk 10. Sometimes I risk 10. But I risk 5 most of the times. 5%. So 5% of 300. We're going to calculate 5% of 300. Can you see what I'm doing?
Yes.
Times 5%, right? Times 0.05. So $15. It means that per each trade, you can see what I'm doing now. Per each trade I'm taking for a week is $15. I'm risking $15 out of my $300. Can you see it now? Can you hear me?
Yes.
I'm wasting $15.
I can hear you.
Now, I look at it now, I say, okay, if I'm wasting $15, if I should lose this trade and I lost my $15, will the remaining balance be able to recover the $15? Now, let's check it out. Now, $300 now, minus 15, minus 15. Now, I have 285. Now, you can see that I still have enough balance to recover back my $15 in case I lose this trade. Can you see it now?
Yes.
I still have like $285 to recover back my $15 in case I lose this trade. So that's what I do. Now, for me to risk only $15 out of this trade, what do I do? Now, that is where my stop loss comes in. I said we are risking 15 pips for this stop loss. Sorry, we are risking 15 pips. Yes, in this trade we are risking 15 pips. Now, how do I make sure that that 15 pips doesn't exceed 15 my $15 that I'm ready to risk? Now, 15 pips. Now that's where our lot size come in. What particular lot size am I going to use to be able to risk $15 in the market? Now, let's assume I'm using 0.03. That is the proper lot size to use for a $300 account, 0.03. If you have a $100 account, you should be using at least 0.01. If you have a $200 account, 0.02. If you have a $300 account, 0.03. That is it. That's the proper lot size. That's the proper lot size to use. Now, let's assume I'm using 0.03. Okay, this is the lot size I'm using to trade. Now, 0.03 now, per pip movement, you should be making at least 0.3 cents. Per pip movement, 0.30 cents per pip movement. I hope you know what I'm talking about. You know how to calculate pips now. Per pip movement, you should be risking like 0.
Not really.
Making like, eh?
No, I can't calculate it.
You can't calculate pips. Okay, if you are using zero, okay, I say risk management is a different topic on its own. If you are using 0.01 per pip movement you will make from the market, or per pip, sorry, if you are using 0.01 lot size to trade, if the market should move per pip, like per 1 pip, you should be making at least 0.1, 0.10 cents, or you should be losing. Like if the market is going in your favor, you should be making at least 0.10 cents per pip. 0.10 cents per pip. But if the market is going against you, you should be losing 0.10 cents per pip. I don't know if you understand what I'm trying to say. If you are using 0.02 to trade, 0.02, then per pip movement is 0.20 cents. If you are using 0.03 to trade, per pip movement should be 0.30 cents. If you are using 0.04 cents, 0.04 lot size to trade, 0.40 cents per pip should be what you'll be making or losing. If you are using 0.05 lot size to trade, 0.50 cents should be what you'll be making or losing per pip. Now, if the market should go in 15 pips and we are making 0.30 cents per 1 pip movement, now it should be 0.30 cents times 15 pip. You understand that kind of mathematics now?
Yes.
Are you following?
Yes, I'm
Are
following.
you following? Okay, now 0.30
Yeah.
pips, 0.30 cents times 15 pips. That is per 1 pip is 0.30 cents. Now in 15 pips, you should calculate when we're calculating our ratio times 15 pips, which is 4.5. That means $4.5. Okay, that is if I should open one position. Now you can see that I am only risking $4.5 but I say I want to risk $15. I say I want to risk $15. That is where I increase my lot size or I open multiple positions. Either I increase my lot size from 0.03 to 0.05 or I open multiple positions. But me, I prefer to open multiple positions so that I can close some position in case another arrow, a reversal arrow come that can close from position. Then the remaining position I can actually break even for more profit. All right, you understand me?
Okay.
Now,
Yes.
at that, I'll open different position. Now, since one position now, I'm already using for $4.45 in case I lose the trade. Now, I said I want to risk $15, not $4.5. I now open another position. And I open another 0.03 position. If I open another 0.03 position, I'll still be risking the same $4.5. So times 2. That's times 2. That's 2 position now. which is $9. You can
Yes.
see just two positions now we're risking $9. Now I said no, I want to risk $15. I want to risk more than $9. I want to risk more than $9. I want to risk $15. All right. I want to risk $15. Now I'm risking now. I now open another position with 0.03. Okay, plus another 4.5. Plus another 4.5. That is three positions. That's
Okay.
13.5. Now that's the triple. I say I want to risk $15. I don't want to risk $13.5. $15. Now I've opened 0.03 position like three times. That's 0.06 in accordance. 0.06. If you merge them together, now I've opened that triple. I'm using 13.5. I said no, I want to risk $15. Now I now open another position. Let me open another 0.03 position. 0.03 position. Now, if I open at 0.03 position, that will be plus another $4.5 that I'm risking. $4.5. I'm at $18. I say no. Now you can say I'm already risking $18. If I should open that fourth position, I'm already risking $18. I say no, I don't want to risk $18. $18 is too much. I want to risk only $15. Are you understanding? Are you following?
Yes.
Okay,
Yes,
now
I'm
I said I want
following.
to risk only $18. I said I want to risk only. I want to risk only $15, and the market is already saying if I should open my fourth position, I'm already risking only $15. Now, it's either I reduce my lot size on the fourth position. On the fourth position, I reduce the lot. I'm not going to be open 0.03. Either I'm going to be open 0.02. Okay, now we have $13.5 on three position, right? $13.5 on three position. We are risking
Yes.
$13.5 on three. Now let's say we are opening the fourth position 0.02. 0.02, it means that I'm making 0.20 cents per one pip movement. So times 15 pip movement, times 15 pip movement, that is 3. Now 13 plus $3. 13.5 plus $3 plus $3 plus 13.5.
That is 16.5.
That is 16.5, right?
Yeah.
16 point now I said no, I want to risk only $15. I don't want to risk with $16.5. I don't want to risk it. Now I can actually leave it like this because 1.5 is actually a little money. 1.5 is actually a little money. I can actually leave it like this. Open the fourth position with 0.0, but no, because of discipline, based on discipline and structure. Discipline and structure, I want to risk just $15. I don't want to risk more than $15. Now, is either I reduce my position, I reduce my lot size to 0.01. Now let's open 0.01 on the fourth position. On the fourth position, 0.1. That is, if we open 0.01 position on the fourth position, we are going to be making 0.1, 0.10 cents per movement. So 0.10 cents per movement times 15 movements is 15 pips movement. That is 1.5. 1.5 plus, let's do it plus 13.5. That should be
Going to give
14.5,
15.
right? Okay, that's going to be 15.5. You can see now 15. You can see I'm risking at 15. I'm risking $15. So what I'm going to do now is just open the last position with 0.01. So how many position did I open now? We opened how many?
That's
4
four.
position. 0.03, 3 position, 0.1. So everything, the lot size is accumulative to how many lot size now? Accumulation, we accumulate is how many lot size. So is either that is 0.07, I guess. You can see what we did here now.
That I think 0.10. 0.010, Abi,
Is it
for
0.10
the lot
or
size.
0.07? I mean the lot size. If you calculate
No,
all the lot size together,
oh,
yeah, the lot size. I mean
little bit. Okay, yes,
0.03. We
yes.
open 3 position, then 0.1 1 position, 0.01 1 position. That is
Yeah.
0.07, right? 0.07 lot size. Now you
Yeah.
can see. Now with this kind of calculation, you'll be at rest instead of you to be emotional. Instead of you to become emotional when you are trading, your mind will be at rest that okay, it's just $15. I'm risking 5%. Even if the thing lost, I will recover. Man, and not all your trades cannot be 100% accurate. All your trade cannot be with their losses. You will make losses. You understand? You will make losses. So
Yes.
what you just do that is $15. Okay, right now $15. You can see with this kind of thing now, you've already decided that yes, I want to risk $15. Even if the trade should lose, I will know that I will recover my $15 when I've lost. When I lose, I recover my $15 in the next trade. You understand what I'm trying to say?
Yeah.
I come now. Me, sometimes I trade
Yes.
twice a day. Sometimes I trade only once a day. Only once a day. So I depend on how many times I see my entry in the market. Sometimes once a day, sometimes twice a day. All right, depends on how many times I see my entry in the market. All right. So that's all. That's also what we do. I don't know if you understand this fixed management I just told you now.
Yeah, I understand. I understand
If you
you.
want to ask anything,
Not really. But I want to ask if the ROSI, it's not about the risk management too.
mm,
If the ROSI in the 15-minute time frame is overbought,
mm, mm.
can you still take that as a good confirmation
Yeah, if the RSI is overbought, you should be looking for a sell. If you get a confirmation, you should be looking for a sell trade.
in a 15
Now,
in a
hmm?
15-minute time frame?
In a 15-minute time frame, yes, because right now it seems that the market is reversing up. The market is going up.
Yeah.
The market is going up. You can see what I'm telling you. The market is going up. So as the market is going up now, the market can either be on its way to the overbought position. So if the market should go to its overbought level, we should be waiting. We'll wait. When the market starts reversing, it should be if the moving average should cross the 70 level, if it should cross the 70 level, we should be waiting for a reversal for it to cross below the 70 level back. Then we should be looking for a sell. We'll just wait for a confirmation. When I get my confirmation arrow, I will drop a signal in the group.
Okay.
Yes, I will drop a signal in the group.
No problem. It's fine. It's
But
nice
if the
though.
market should break that zone and get that zone is very strong. I tell you that that's the obstacle we're seeing from the market cannot get to the over that
Yeah.
zone is the obstacle. That's the obstacle we're seeing. So if the market should not get to the oversold level, but if it should get to it overbought level, if the market should get to overbought level, we'll be looking for a sell. But if the market should get to it oversold level, we should be looking for a buy. So we are waiting patiently now. I
Oh,
will keep my eye on the market.
okay.
Yes.
Noted.
So
Thank you
your
very much.
account. So which account are you trading on? You want to start with
It's a
demo?
prop firm.
Okay, the prop firm. Yeah, the prop firm. You know that your account. How much is remaining in your daily drawdown? Should be around $30, right?
Remaining thirty
I mean
thousand
thirty
naira.
thousand. Now you should know the lot size you are using 0.01.
Yes.
Hope you know that. Now if you use
Yes.
0.01 now, all right. So I think we should be taking like 15 pips. Let's use your account size 15 pips times 15. So it should be
That
like
is
1.5.
1.5.
So since your account is in naira, so let's do it. Let's convert it to
Yes.
naira times 1562. 1562. That's the conversion rate. That is 2343. So me, I would have love it to open two positions. Me, I don't like opening one, but I like
Okay.
open two positions. Plus 2.4. This one should be reaching like $4. Two positions is actually okay because you are reaching like 10%. But since your drawdown, because of your drawdown, you might just as well you can just leave it as one position. You can as well leave it as one position at one position. You can just open one position. So because I can actually drop a sell, I can actually drop if the market did not get our TP. If we could not get our TP, then I will drop a signal for everyone to close. I will just drop it.
Okay.
I will tell everyone to close. Then you can actually close one position. But if you can open two positions, but I'll just say just take it easy and open one position for proper risk management because of your drawdown. So because of your drawdown, you got to a drawdown. So but I'll just open one position. But if the market should get so this one is 30 pips now. We'll not even calculate our 30 pips. This is some I do take 30 pips from the market, 30 pips mostly from the market. So we that we are using 0.07 now. Meaning that I use 0.07 now to
Mm.
trade. So if the market should go in my favor and hit that 0.70 per pip movement times 30, what am I doing? 0.70, okay, times 30
Mm.
pips. 0.70 times 30 pips, $21. Can see how much I made. Almost 10% of my equity. $21.
Okay.
Okay. if I should do this for like maybe one day each day and we didn't actually make loss for this week. Because me, I've traded a week like this, I didn't make any loss for a week. Like a
Wow.
week like this, I didn't make yes, I've traded like a week like this, I didn't make any loss for that week. And I've traded a week that throughout that week I made loss. The market will shock you. You just that's why you need to trade the proper risk management. I've traded a week like this that I didn't even make any loss at all. And I've traded a week that I made loss throughout that week. Throughout that week I made loss. Like that's how the market is. That's how the market is. The market can shock you. So you just have to trade the proper risk management. As I said, that is risk management that will take you far. It's risk management that will take you far.
Yes.
The risk management is what will take you far because you can trade a whole full month. I don't know if you watched a video when Forex was like he was saying something. He said he made loss throughout one full month. He traded one full month and he made loss throughout that month. I don't know if you heard him say that. If you follow him very well, he made loss. Like he traded that month, and throughout that month was loss. He was just making loss. That was a very bad month. A month was just like in the forex market we have 20 days. 20 days make one month. So just imagine making loss throughout that month.
It's very, very somehow.
Yes, very normal. So
But that's the
that's like
market,
risk management. Yeah, that's the market for you. It's risk management that will take you far in this thing, in this industry. Manage your money well. Just imagine me now making like just imagine now me making like loss throughout one week. Now I'm losing like $15 Monday. I lost $15 Tuesday. I lost $15 Wednesday, Thursday, Friday. That's 5 days times $15 for every day. God forbid, this one will not happen to me again. $15 times 5. You can see $75 now. $75 now.
Yeah.
$75 now. I lost and I have $300 account. $300 minus 75. Minus 75.
Let's give
Minus
225 remaining.
225. You can see my balance. Maybe you can see my balance. You can see that my balance is still
Yes.
enough for me to recover. As I say, it's risk management that will take you far, bro. Now risk management ain't going to take you far for this market. Risk management take you far. If you can manage your money properly, if you can manage risk, you don't need to fear. No fear. 1 week can be bad, the next week will be profitable. You can see that if I have a $300 account now and I'm risking $75, I'm risking $15 per trade. Every day I'm trading once a day, and I lost. God forbid, I lost throughout that week, and I made $75 loss and now my total. And I did not revenge trade though. I did not revenge trade. I didn't take it hard on the market. I just left till the next day. I continued. That's discipline. That's discipline plus wisdom. So 225 is still okay for me to start the next day with. Some people one trade, if you have $300 account, one trade they are risking $50. That's a very bad risk management. I'm telling you, you will blow your account as quick as possible, as fast as possible. You will blow
Yes.
your account. So that's this risk management that will take you far in this industry. If you can manage your risk, and you know the kind of position you are opening. If your account is small, avoid good. If your account is below $200, just avoid good. Avoid good. Avoid go and trade other currency. So
Yes. So
that's just it. This live stream, well, I think we've taken like more than 1 hour, more than 1 hour 30
yes, so it's
minutes.
going to 2 hours now.
Going to 2 hours. We analyze the market for 2 hours. Okay, like
Hmm.
okay, so do I later joined? Okay, we have two people that joined.
Yeah, one
Wait,
person
let me.
left.
One person left. This is the guy I said I was waiting for. He was Zodua. Can you unmute yourself and speak? I want to know if you're following up.
Yeah, I'm following up. Good morning, sir.
Okay, good morning. Have you been following up?
I just tapped like 1 hour ago.
1 hour ago. Okay, that means you've been
Like,
long.
yes. Let me say I start from the risk management.
Okay, the risk management.
Yes.
Okay, we've analyzed the market before then. You said you are new, right?
Yes.
Okay, so what actually okay, according to, do you have any question? Like, so far, so at least you heard what we said so far. So, do you have anything to say? Do you have anything to contribute, or do you have any question to ask?
Not for now. I download view once. I'm trying to view this chart, but it's kind of different from my own.
Trading
That's
view.
why I'm confused about it. Trading view.
Trading view on the phone version is kind of different now from the Apple. They are kind of the same thing. They have the same interface, but this is a laptop screen, so it's gonna be
Okay.
wide and stuff. Yes, they have the same interface.
All right, so
So we analyze the market so far so good. So far I think we are looking for a buy or a sell trade. So it's actually we don't want to take, we actually saw an entry, but that entry did not align with our strategy. So we have to leave. We
all
left it
right.
that way. Um, Timothy, unmute yourself. Take a look at the market. See what's happening on the market now. Check the 15 minutes time frame. Are you there, Timothy? So Izoluwa, can you hear me?
Yes.
Okay. Uh, I will take yours now. You said you don't know the basic knowledge. You don't know the basic. You don't know the basic. You don't
I'm
have basic
talking
knowledge,
to.
right?
No,
Huh?
I just like the basic. I've been using free signal.
Okay. Okay, we see now. Okay, this trade now. What I'm gonna do for you now is I'm gonna host a one-on-one session with you. Understand?
Yes.
I'm gonna host a one-on-one session with you. So I'm gonna teach you right from the basic. I'm gonna take you right from the basic. I'm going to take you the basic knowledge so you can understand it. So when next that we have this kind of live, you can be following up with what we are doing. All right.
All right,
So
so
you just tell me the time you will be available, the time you think you will be best for you, so that I'll take you on private session. I'll take you on one-on-one private session. Okay.
all right, so
The market
Yes.
is oversold though. And,
The market is going down, right? It's like okay. Let me check if
yes,
the wait. Let me
it has
check.
it's got to 29 now in the
You can see what's
RSI.
happening now. Okay. Hold. Yeah. I can see it now. I can see it. Let's hold. Let's not take any trade yet. We are not taking any trade yet. Let's hold. Then market is trying to test us like this. Let's hold.
Yes, so it's good to be patient. To imagine those people that bought
I said
when they
that.
draw the
Imagine those.
resistance,
You see what I'm telling
when
you
they draw
now.
the
I,
support
I,
and
I,
resistance.
now I told you.
Mm.
I just know what I'm telling you. I'm telling you that what I'm seeing now. The only obstacle I was seeing is this zone.
The zone has been broken. Eh,
So let's not rush. Let's just wait. You can see the arrow now. If you take a look at my screen, another buy arrow has come. There's another buy arrow here. There's another buy arrow here, but let's not enter. We cannot enter the trade like this now because I've not gotten what I want. Even if the market
Okay,
starts reversing up from here now, there's no problem. But I've not gotten what I want.
okay.
I say it's good to wait. So let's just hold. Wait, I've not gotten what I want yet. The market has come back to break this zone. It's still possible. It's still possible that the market will still reverse down and will still go down.
Mm.
So
Or
I've
to
not
start
gotten what I
selling
want
from
yet.
there.
This is not what I want. The market can actually still start buying from here. Can still buy from here a little. Can still reverse up from here, and it's still possible that it can still start selling. To still sell down until it gets to oversold level. Get to oversold level. So that's why I said this thing is 50-50. You can see what this thing is doing. It went up, come down, went up, come down. I see what it's doing. So we'll just
Yes.
have to wait. We have to wait. Like this now, we have to the market is trying to test us like this now. Some people might see this kind of thing and enter immediately. But this is where the market tries to test our emotion. So the market tries to test our discipline. So we have to wait.
Yeah.
We have to wait. If we would not see our perfect entry, we just have to avoid the market for today. It's better like that. It's better if we not see our perfect. Even if there's a possible chance that the market can still even start reversing for me and still going uptrend. Because the market is oversold like this, but I've not gotten what I need. The market is actually oversold like this, but I've not gotten what I need. I've not gotten what I want from the market. So there's a possible chance that the market will start reversing for me and start going up and uptrend, and people will still catch some pips and still make some money. But me, if I've not gotten what I want yet, I'm not sure I'm going to enter the trade. I need to get what I want. I need to see what I want, a particular thing that I want. I need to spot my entry. If I can spot my entry, my perfect entry, I will lock in. I'll go all in. I'll go all in.
Okay, that's nice.
I'll go all in. So let's just wait first for the year. So yeah, like this now, not coming down. You can see this zone that has broken this zone. How I know that this market will come back and still break this zone is that you can see this candle. This candle already broke this zone a little bit. For this candle that broke this zone, it means that the zone the zone was strong here because the price of the market actually came back here, reverse, came back here, reverse, came back here, reverse, came here, it broke it a little bit. It means that this zone is already weak. It's already weak. Then it went up, then it's still coming back to break it again. That zone is finished already. I'm looking for something. If I should get it, I'm looking for something. I'm still watching the market. So, Zodua, on mute. Oh, Jesus Christ. Sorry, Johnny. No.
This your chart is nice. Oh.
My,
Oh my. This is your
my
trading
what?
views charts. This very nice.
Okay. Now editing now. If you edit
It's
and
very
if
very
you're
nice.
trading, you are like to edit your chart the way you want it to be. This is actually my brown color, so I have to change the chart to my brown color.
Okay.
Yeah, it's actually my brown color. Gold and black is my brown color. So I have to change the chart to look like my brown color.
Okay.
Yeah, so I
That's
want everything to
nice.
match.
Let's wait for market conditions to play out now.
As in, let's wait for everything to play out. Everything should play out like this. For
My
striking.
my type of trading before,
Hmm?
if I didn't see my analysis,
You
I
see?
will still go and I said my type of trading before.
Uh,
If I didn't see my analysis for that day, I will still try and
mm,
take trade. That's why I lost a lot. But I realized that
yeah.
even if you don't see it, you just leave it like that in the next day.
No. But that if you be disciplined in the market, you should be disciplined. If you don't see your analysis in the market,
Yeah,
if you don't see your setup, if you don't see your don't trade for that day. Just avoid. Sometimes
yeah,
you might see that the market actually like this now. What will happen here is that something might happen in this particular zone. You can see that the market might actually reverse. It will start going up. Now, if you look at this, you might say that I'll take the entry from here, or I'll take entry from here. But see, when we see sometimes the market will come and test your discipline. That's what the market will do. The market will test your emotion. Now, what the market is trying to do is trying to test our discipline. For now, me like this
yeah,
now, I'm more disciplined to the extent that if I don't spot my entry, if you like, let this market, you can say I'm seeing a buy arrow here. If you like, let the market reverse, they go up like this. The market, I'll say, okay, yes, leave it. I did not spot what I was looking for in the market. I will not take that trade. I will not regret. There will be no regression or anything. I won't take any, I didn't take the trade. The market is also trying to test your discipline. I'll just let it play out like that. Whenever if I spot my entry, that's when I take trade. If I don't spot my entry, I'm not taking any damn trade. Whether the trade should go in profit or if the trade should go in loss or profit, I won't take. If I don't spot my entry, I will not take any damn trade. I need to spot my entry. I need to spot all my conditions. I need to spot all my conditions first. All my conditions must align together before I take entry. All my conditions must align together before I take any entry. So that's just it for me.
Yes, so very, very important. Very, very important.
Very important, though. Very important. Very
It's like
important.
market. It's like
Yeah,
market
go
is
on.
going.
It's reversing, right?
Yeah,
It's going up.
It's going up little by little. Mm.
Oh my, now just make it just do like that. So they go up. We will see anything.
Yes, we will go see you.
We will see anything. We'll not see anything today. We'll just wait till tomorrow.
Okay. Me, I be the plan how I want to go use them for other pairs, mostly Euro USD or USD JPY.
Okay.
I
Yeah,
don't know
you
much
can use it
about
on other pairs
indicators
like
before.
Forex. Huh?
I said
You
I don't
say?
normally use indicators before.
Okay, what do you use?
It's just normal analysis. I don't hear of indicators, but I hardly use them. I don't even know any of them.
Some people will tell you that indicators are not profitable. Yeah, there are some that if you see, they will tell you indicators are not profitable, but indicator, you don't just have to just like me. There's a way I use indicators though. So no strategy is weak. That's just it. You are the one that will master the strategy. If you lose, you have to go back to the market and check what you lost, what made you lose, so that next time you will not repeat that same mistake. When you see it, you avoid it. That's learning. That's learning process.
For that one, I hardly do that one. Go back to my trade and see the reason why I lost. But
You have to
I will
do
start
it.
from next day.
You have to
I
do
will
it.
start today.
Yeah. Now it will help you.
It
It
will
will
help a
help you.
lot too.
To help. To help. Like this now, I won't even go drink conflict sef.
You're all good now. Me, I wanted to go and bake.
You want to go and beat? I'm even done sef. I will
Um,
just keep an eye on the market. Idowu, are you hearing me?
okay.
Idowu, okay, I say Idowu. Uzodua.
Yes, I'm hearing you.
You can. Okay, I said you just get back to me on WhatsApp. Okay, you tell me when you are free to get to go live.
All right, now let me
Right?
just do it right
So
away.
we can go live on Telegram. Yes, we can go live on Telegram. I will teach you basic knowledge.
All right, sir. No.
I will teach you the basic process. Yeah.
Okay, sir. Thank you.
So when I get his perfect entry for the, I will drop the signal on the chat. I'll drop the signal in the channel. I'll drop it in the channel. Then if we should make any profit, are you hearing me, guys?
Yes.
If we should make any profit or loss, so you just drop it on the group. You drop your screenshot on the group. If you should make any profit or loss, just drop your this thing, drop your screenshot in the group. All right?
All right, sir.
Yeah. Drop your screenshots in the group. So when I get the perfect entry, I'll post it in the channel. You can see what's happening there again. Take a look at the chart. Can see another set I will just came back here.
Yes, I'm seeing it.
See what's happening now. Market is just I don't you just have to wait.
Before that say arrow, there was a long arrow at the bottom.
Yes, now this is the wrong arrow. The wrong arrow is still there.
Mm,
This is long arrow, it went up now, and that set arrow is coming down.
mm. You should all wait and see now.
Let's just wait. We'll wait. Alright now, let me end the live now so you guys can do whatever you wanna do. Alright?
Well, I'll
So
message you
I
on
will
WhatsApp too.
okay, fine. Yeah, I'll be active. So you guys, I will drop it. So Izodua, you understand you understand the risk management I dropped now, right?
Yes.
What's your account balance? What's your equity?
It's empty now, but I'll make deposits like first week of January on
Okay,
$200
okay,
deposit.
okay, fine. Alright, so just make sure you manage your risk. That's very important too. Even if you don't know, this is risk management that will take you far. It's risk management that will take you far in this side. No, don't rush out. Don't worry, we'll talk about it. We'll talk more.
All right.
Uh, okay, I'll be ending the live now. So I'll keep an eye on the market. If there's anything, I'll let you guys know.
Okay.
Uh, thanks for coming on live, Danny.
Yeah, then I appreciate boss.
Yeah, peace
Thank
out.
you, boss.
Thank you. Yeah. You're welcome.
Okay.
Yeah, I spent like 1 hour, 1 hour 25 minutes.